All right. Good evening, everyone. Welcome to the Hurley Investments Market View commentary for what are we? We're Monday, the 7th of November. Our year is flying by. I apologize for last week. I do have a recording. We're just having problems with sites coming back up for Hurley Investments. It is back up, the myhurleyinvestment.com. But we're having new stuff getting loaded to it, being a bit of a problem. So bear with us. We should have it here in just a bit, and we will be good to go. 2 weeks ago, we talked about the thoughts of how to approach a bearish market. And I'm going to ask you guys to give me your psychology or your thought process on how to endure a bearish market. And Alan's here. So Alan, I'm going to write your three down because one, I liked them because we already talked about it. But when the market goes on sale, it seems like everyone runs out of the store, even though great companies go on sale. And we talked about this a little bit. Someone tell me why does this happen? What is the thought process behind why that happens? Because it is important. And Alan, you're not allowed to say anything because you know the answer. You know the answer, and you just, it's quiet. All right, so here we go. And I agree with all of these that I'm seeing right now. Fear, losing money, and a really good one there, an emotional attachment. Man. I love that one, and I'm going to restate it a little bit. And if you don't like it, David, just I'll try to restate it again, right? This time is different with new end of the world reasons to get out. Is that okay, David? Just give me the heads up there, right? And out of curiosity, obviously, yes, there are some companies that go out of business. There are some companies that go out of business, and that happens, but for the most part, they don't. In fact, I'm just going to bring you up to speed in just something I've learned. With my son's traumatic brain injury, we call that a TBI, right? With his TBI, there's a lot of things I'm learning that I thought I've already learned. And it really comes to patience, small wins, small gains, little improvements. It's the little things. It's the tiny little things that happen down the road. Now, it's interesting because when you go through those, hope is one of them that you have. You hope things are going to get better. A lot of the things we hear from the doctors are like, you know what? It should get better. It could do this. It could do that. We don't see any of it right now. In fact, right now, we have more of a worry that probably he's going to go back into the hospital next week for like a 10-day observation, because it still seems like he's bleeding inside of his brain. But when you look at the market, you have that same thing for a hope down the road. In fact, what is our hope right now that could change our markets as early as tomorrow? What's our hope right now that could change our markets as early as tomorrow? Yeah, so it's funny. Three of you just typed elections, right? A red wave, because that means the House is now Republican and nothing will get through. It's a stalemate. Executive orders won't get funded. Nothing's going to get through. Future hope. We have improved economy. What equals an improved economy, though? What's the future hope that's coming most likely in December? It is lower inflation, but there's something that affects that lower inflation. There you go. Last rate hike for a while, right? One more 75 basis rate hike. That should be the last one for a while. I really enjoyed what it all means. It is not normal for the Fed to raise its policy rate by 75 basis points. The normal course of things over the past 30 years have been move rates up or down in a 25 basis point increment. There have been some 50-point moves along the way, but 70 points is a true outlier. Accordingly, it says something about the Fed's race to catch up to the implemented its fourth consecutive 75 basis point rate hike and left the open door for another 75 basis point move at the December meeting. It's moving at Usain Bolt-like speed. The difference is Bolt won several Olympic gold medals. The Fed, for its part, gets a participation ribbon, but is a long way from the podium. It will be appropriate for the Fed to slow the pace of increases, and that time is coming. Those aren't our words. They are the Fed Chair Powell's words. He isn't uttering any word, however, that suggests the Fed is done raising rates and considering cutting rates. So what we're looking for is really, we want, come on, a Fed pause in rate hikes. And in all honesty, those two things could give us one of the longest Christmas rallies in history. Now, some of you have said, well, Kevin, I kind of feel like you always got to be positive. And man, I'll be honest with you, I kind of feel anything but positive, right? In fact, what I tell you guys or send to you guys is mostly other people's research that when I run my numbers, I agree with them. I mean, that's what I'm doing. I'm truly running other people's numbers and agreeing with them because they put the basis of the research out there for me. Will Baidu go up? And this is in a direct question from William, right? Will Baidu go up? Well, I found the stock market forecast. 35 analysts offering a 12-month price forecast for Baidu have a median target rate of 181 with a high estimate of 269.97 and a low estimate of 102.21. The medium estimate represents a 98.79 increase from the last price of $91.22. Baidu has somewhere in it a 98.79% increase, upwards to a 200% increase. For those of you that were worried about a couple things, I know I've had a talk with some of you at Boeing. Oh my gosh, Kevin, Boeing is at 120. It's going to 113. Well, we just had a 33% increase in Boeing up to 164.91. Boeing doesn't stay overbought for a long period of time. We are watching it, but we can have it overbought just as long as it has been oversold. We have a couple weeks here, we have a couple weeks here. We could see a move to Boeing pretty easily to 200 based on an election, based on some words from the Fed between now and the end of the year. I'm going to bring a couple more. I'm not going to go through all of them, but Bank of America for some of those small accounts. Kevin, what's going on? Well, again, 29 was pretty close to the bottom, so we have a double bottom from 29.31 up to 37.01. Kevin, it's a doji today. I know we're waiting for election results, but we had a $37 and $37, a $7.70 rise, which is over 20% from Bank of America in the last month. Ford, $11.13 to $13.70. There's another 20% move higher. Under Armour, $6.49 to $8.26. Another above 20% move higher. Apple's had a nice run. Back down, we had the protection on. We're looking at now having a good time to add more shares to Apple. It's down at the lows. It's an opportunity where it's bounced 3 or 4 times before. And with election results, Apple could have a nice move higher. If you look at some of those positions, technically speaking, a great opportunity on Apple. Meta, not such a great opportunity, but what was the other one I wanted to bring up? Oh yeah, Square. Some of you that we have those Square long puts are like, what are you guys doing? Square long puts is an opportunity. Last week come from consumer confidence, 51 to 62.67. There's another one of those 20% plus movements up, and there's still room to run. Now, I'm not saying that we have it all figured out. Obviously, we don't. But there are those opportunities that are there, and we do have some things that are setting up in our market that will give us that opportunity. Earnings dates coming up. We got Baidu It's now estimated the 16th. I don't have anything set in stone for it. Costco on the 8th. Dollar General is estimated for December 1st. Disney is on the 8th. After the market closed, couldn't be a worse time to have their earnings, but we will be paying attention to it. Micron on the 20th, Target on the 16th. We're looking to see Disney at least go up to the highs of 108 here recently. More realistically, 124 could be Disney's highs. We do have protection on like 100 or 101. But we are ready for earnings on Disney. The big picture, I kind of gave it to you already. Really what it all means was where we're looking for a continuation in our election rally / Christmas rally will truly be 100% dependent upon the commentary that we're going to hear from Powell when he talks about interest rates. Market recap, and I found it interesting that a lot of the, it seemed like to me a lot of the energy stocks had some good earnings and then gave them up. I'm going to look at Chevron. Not really. Only came down from that 185 down to below 180. Not a bad run. ExxonMobil looks the same. It was just that overbought. I do like ConocoPhillips. All look about the same. All overbought though right now. Valero. I feel like we need some more energy in portfolios. I just don't see I just don't see the long-term opportunity. In fact, let's face it, if the Democrats do win and keep the House, or even, you know, for somehow take the Senate, and usually that doesn't happen when we have the numbers we've had here. Usually the other opposing party starts to win seats in areas. It's usually related to GDP, unemployment, inflation. So I think there's a couple things going against Biden and the Democrats right now. But if let's face it, if the blue wins and we have the House still Democratic, then you'll see more First Solar opportunities. You'll see less oil and gas opportunities, more battery and electric car opportunities. So there's some things that you have to remember in regards to that. Maud, I'm going to hit that question here at the end if that's okay with you. Where will our markets end this week? I'm going to go for higher. I think the elections, for the first time in 12 weeks, I'm going to think the elections are going to have some effect because of where our economy's been here recently. Dow Jones Industrial Average, we're back above the 200. SPX, we're back above the 50. Interesting to see that we're breaking some long-term resistance levels. The NASDAQ just sucks. There's a simple answer. Earnings this week, a lot less. Activision, Lyft, Mosaic. Mosaic did horrible. DuPont and Triple D, Akamine and Disney on Tuesday, plus the elections. I'm going to go ahead and I'm going to put the elections down here. Means I will not be sleeping Tuesday night. DH Horton, Wendy's, Beyond Meat. You want to hear a stock that's really gone down? Beyond Meat, it's been one of those. DDS on Thursday. Consumer credit reports were today. Pretty amazing. $24 billion in consumer credit. Less than the $30 billion last month, but people are really using their credit cards. They're using their credit cards, and there's things that they're looking at on spending money for Christmas. Elections on Tuesday. Wholesale inventories, we have CPI and core CPI on Thursday. They are probably going to be high. But I think, again, Stuart just asked, what about CPI for a higher week in the market? We came off of a 3.35 down week last week. Hurley Investments was down about 0.5%, so we did pretty good, making up the majority of last week's downward movement. About 2.85% we made up. But I think elections will have more pull, Stuart, than the CPI or inflation numbers for next week. Couple interesting articles. Dow stocks, I liked it when they said these four could have their best months ever. Visa and Disney were in there. I completely agree. Apple beats on their iPhone sales. This is from their earnings a week and a half ago, and their services. They did announce that, hey, they're expecting things to be slower in China, but for those that are paying attention, they also thought that they would ramp up their Vietnamese and their India and their US opportunities for the newer iPhones, the 14, the 14 Pro, and the 14 Pro Max. Although, yes, I read the article that came out and said, hey, they might be a little short. They always say that to hedge their risk. Apple is a great opportunity to buy in and pick up some more stock. I found a little bit of information on Social Security benefits. I'm starting to pay more attention to this as we're looking at Jared possibly being disabled. So we are paying more attention. I just found this article as I was doing my research for Jared. Pretty interesting information for you guys. I like the article. Goldman Sachs says Boeing can soar more than 8% after earnings. I agree. And I've got an article that says from Stifel that says that S&P could rally 15% over the next 6 months as inflation cools. The key word is there, if. I'm going to go to questions from you, but two of you put questions in, and I think they're pretty important. So should we be investing in China? And the short answer is, I'm going to ask you guys, should we be investing in China? Second largest economy, and by far it has the most ADRs / stocks on the US exchanges. With that said, I like all three of these ones. One said carefully. We have, of course, we should if we want to be diversified through a world economy. And again, William, that's easy for you to say because you're over in England, right? Last one is also interesting, and I agree with you. I guess if you can find a way to protect it. And so right now there, you'll see we we did take off some leap long puts, some leap long calls on Baidu. We got a little, boy, just from the 150 down, it did not look the best. So with that, we're like, okay, let's be smart, right? Let's rein in what we have there. Let's take some capital and keep it on hold. Again, they did really, really good last time. I mean, they did fabulous. But if you had new money, now is not the time, in my opinion, to be in Baidu. It just, I think we need to wait back and see if we can get things back on track with China. Do you think there's a risk of delisting China stocks from U.S. exchanges? There is, but it's interesting because Baidu is an ADR. So maybe next week we'll go through what an ADR is. Well, its primary listing's on the U.S. market. Baidu's primary listing is not on the U.S. market. It's on the Hong Kong market. Its secondary listing is in the U.S. and in Shanghai. So that's why it's an ADR. In all reality, Baidu can't even be delisted as a stock because it's a stock replacement on the exchange, for a better use of the term or the word. Am I worried about some other stocks like Alibaba, like what is the other one I'm trying to find? Am I worried about some other ones that for all intents and purposing are a lot scarier than Baidu? Yes, I would be. And a lot of those Baidu owns 30% on. So the short answer is it's a risk. It is a risk. It is a risk, and I think there are very few companies that I would take that risk on for global diversification. But Baidu is one of them because Baidu is about the best index of Chinese companies that you'll find. It has its money in certain pots or certain areas that have the best opportunity to go higher and have the best opportunity to go higher in a deflationary market. So I'm still a believer as of right now, and I'm not worried about it getting delisted because it's an ADR. And its primary listing is not on the U.S. It's its secondary listing. And so is Shanghai. Its primary listing is in Hong Kong. Are there any other questions? I know I'm probably ending it a little earlier tonight. We've had a couple steps backwards on Jared, so I guess I'm let me finish with this. The beauty of having put protection on is that it protects the majority of your capital from downward moves in the market, and it still gives you the opportunity to have a great return as things come back if you're willing to invest into more shares of stock. When there's huge uncertainty at home, it makes the process really hard. But if you've gone through collar trading, if you've seen the profits and the potential in it, there's huge opportunities. There are huge opportunities across the board. Those are the opportunities we're looking for, and those are the stock positions that we've put ourselves into. When we say ourselves, Keeve and I have our money in the same positions that you guys have your money in. We're collar trading Apple, Disney, Baidu, Bank of America, Ford, Under Armour, Visa. We're there. We're feeling your pain. We're frustrated when things aren't going up. We're ecstatic when things hit a bottom and they bounce. So we're in that position to make sure that we know what's going on with your money, because ours is the same way. That's why we do what we do. We've been through these collar opportunities. No, it has not been the same as what we have right now. 2020, the market was down 20%. We had a huge roar back. We have a lot of cash to put into new positions for that return. We're really excited about the opportunities we have in the next 2 months for our stock market. That does not mean they're going to come to pass, but we'll take a big step forward based on the elections. You might see a lot of activity with your free cash right now based on results from the election. Guys, are there any other questions that you have that we can answer for you? Again, next week you might see Keeve kind of taking over things. Looks like we're going to have Jared back in the hospital possibly from Friday to next Sunday again. Thank you, Maud. I appreciate it. Giving you guys one quick second to ask any other questions. Mark, any questions that you're thinking of? Jim's here. Dave W., you normally have something that you want to ask. And William and Alan, you guys as well. Appreciate it, Stuart. Thank you. All right, then. Hey, guys, I appreciate you being here. I look forward to seeing you guys again in, well, I guess, I don't know. I still might be here next week. I don't know what to tell you. If I am, I'll see you next week. If not, I'll see you the week after. Take care, everyone. Bye-bye.